The Four Horsemen, the Four Racists, and what the hell was that Sell-Off Friday all about? What's up, everybody? Welcome aboard to Bubba's Bottom Line. Todd Bubba Horse with you. It is Sunday, July the 21st. Boy, the year is going by fast. What's up, everybody? What is going on? And what the hell was that sell-off all about on Friday? And, you know, I don't know. Again, you could name any number of reasons of why the markets sold off a little bit. More likely, a little geopolitical tension. More likely, some concern, maybe some profit taking. I don't think anything has dramatically changed. As we've said, we continue and we remain, long the markets. Again, I'm not saying, look, I do think we're probably close. As I've said almost every week, I think we're in the very early stages of recession. And isn't it sad that the whole market structure has come down to waiting for the Federal Reserve to do something? I mean, you're now looking at our entire system is waiting. And of course, they throw out little tidbits here and there to throw you off a little bit. It's like they'd almost be building a position to figure out what they're going to say. But right now, there's now about a 71% chance of a 50 basis point rate cut. The real question here is why are they going to cut rates with unemployment, okay, and with everything that's supposed to be going on? Okay, why are they cutting rates now? Or why is even talk of a rate cut now when we are supposedly in a strong expansion, when everything seems to be going along the way it should be? You know, what are they going to do if they do cut rates and then there is a problem? And I happen to be right that there's a recession, okay, and they're going to have to use the rate cut at a later date and they don't have it to use. So is it worth it for potential short-term gain of the equity markets? Okay, now again, I'm a trader, and it certainly doesn't hurt me. Again, I've got a portfolio. I'm always long, as you know. I'm always long the market. I'm always net long equities. I'm always 100% invested because I'm hedged. So again, I benefit from this, but I don't see it. And I don't see the logic behind it. To me, it's kind of dumb to even be talking about it. So listen, I understand President Trump, because every president since 1906 has been after the Fed to keep rates low. So this is not something new. This isn't a President Trump deal to cut rates. This is the way that every president, they all want them lower because it does stimulate. But of course, when the banks aren't providing liquidity anyways, what difference does it make? Okay, so they can drop the rates to zero. It's not going to help the average guy on the street. It's not going to help the small business. They are not getting the benefit of these lower rates. This only helps the very wealthy, okay? The rate cut, again, you've heard the old saying, the rich get richer. And the rich get richer because they can afford to borrow this money because, it's the old story. If you owe a bank $5,000, they own you. If you owe a bank $5 million, you own them. Well, the big money owns the banks because, again, they can't let these guys default, so they're going to keep it going. And you're going to continue to see these ridiculous buybacks. And again, there's nothing wrong with that. And I certainly understand the logic, okay, of a buyback. I mean, again, we've used the example before, but if you're a company that pays a 3 or 4% dividend, okay, why wouldn't you borrow money at 3% and buy all your stock back? You're making the same payment. I mean, the dividend comes out of the stock. So take the money out of the stock and pay back a loan and buy back the stock. I mean, again, it's perfectly logical from that standpoint. But again, I mean, I think at this time, we could say the rich, the wealthy are building bunkers. We all know that at some point there's going to be a meltdown. Again, this isn't because we're negative of the United States, the negative of the economy. It's just at some point, again, it could be tomorrow, it could be 6 months from now, it could be 6 years from now. Nobody knows, the market doesn't announce itself. It doesn't send out telegrams telling you that we're going to collapse, okay? But we know that a collapse is impending because, again, they come every so often. And when you continue to build the bubble, an artificial bull, okay, which is what this whole money, I mean, this is a trade on money. This isn't a trade on strength. Look, have you seen the earnings? Yes, we've had about, I don't know, 75 to 80% of earnings beats. But of course, when you set the bar as if the business were closed, it's kind of hard not to beat it, okay? You know, it's like, again, getting fixed up on a date, okay, well, male or female, and you know, well, oh, but you're getting fixed up with a superstar, okay? You know, he's the most handsome, she's the most beautiful, and of course, by the time you see her, the 10 that they told you about went to a 1. Well, when you tell everybody that your earnings are going to stink, and you now come as a 1.5, well, of course they're going to look good. I mean, isn't this a joke? The under promise, over deliver. I mean, hell, Apple and Google have been famous at it for years. So, you know, I think that there's a lot more issues to worry about. And again, I think this earnings that one of the things that's very common in markets is the constant ignoring of potential problems or potential issues. Okay. So, I mean, is there any geopolitical tension? I mean, how far do we think Iran is going to push the Straits of Hormuz? Are they going for it now? Is this going to be a major battle? We know that if it continues, somebody's going to take them out. Okay. So, you know, again, I don't know how far they're going to push, but, you know, at some point, it's going to get to a point that somebody's going to have to act. Okay. And I think that's another issue that we continue to look at. Okay. You know, will it be because we don't know what will make the markets have a breakdown or a meltdown. Okay. We just don't, again, you can't know. It will not be, how's this? It will not be the financial data. It will not be the economic reports that come out now. Okay. It could be banks starting to fail. Again, I've said this many, many times. I don't think the banks are as liquid as we think they are. I think that stress test is a bunch of crap. Again, that's an opinion. I don't know that for a fact. I don't have any inside information. That's just my opinion. But again, I know that they're borrowing, they're buying up loans, okay, that are basically troubled loans to begin with. And once again, they're packaging. Okay. So, you know, did the yield curve now uninvert? Okay. I don't think it really matters. I think I think like with correlations, okay, we make up too many big deals about things because, again, correlations work, yes, over a long extended period, but at any given point, so the yield curve inverted for a couple of days or a week or whatever. Okay, it doesn't mean that we're not going to go into recession. Again, I do believe that we are in the very early stages of recession. So again, why would I think that something has changed? I'm not worried about the yield curve. It's ugly. It's been ugly for years. Okay, it's been narrowing and falling. So why would I think this different? Okay, I think, you know, the big rally you've seen in the precious metals is telling you that there's some concerns out there. Now again, I'm making it very clear. I am not a person who believes in precious metals as a protection against your portfolio. I do think we should all own some. I do think that they are a great hard asset to own. They do have value and will act as a currency. But at the end of the day, you know, again, if you're buying it because I think you want to protect your equity portfolio, I think you're making a big mistake. But I think that there's, you know, a lot of things, okay, that are going on that create problems. I think there's a lot of things that we're seeing. You know, earnings are not very good. Okay, we still have high employment and we've got high consumer confidence, but typically those high numbers usually come at the end of a cycle. Okay, and I think that is the real issue that we're seeing here. And of course, you know, you're starting to see some cracks in the armor. Netflix earnings last week. You know, again, I don't know how Netflix continues to do it. And again, I'm not saying they won't make it. I mean, obviously, the stock was $10 once, so it was over 300. But again, there's things that are starting to showing some definite weakness. And again, will the Peter Thiel accusation of Google being treasonous create any issue? You know, are they treasonous? I don't know. I do not like a lot of the things that they do. Okay, I do not like that they will not help the United States Army and the military with their AI intelligence. I think that's a mistake. You know, are they helping China? I don't. Again, there's answers that I don't know, but I think it's worth discussing. I think it's something that needs to be brought to the forefront as to what they're doing at the same time. Okay, because I think that, if you're not going to help your own country, okay, then why are you here? Okay, and I think these are issues. Now, listen, Peter Thiel, very smart guy, billionaire, but he is on the board of Facebook, so he does have obviously some stuff, and it certainly on his own could create why he's bringing this up. But again, I think that I personally believe that these big social media companies and these big search engines and Google and Facebook, I think they're pointing so that it can be regulated. I think they want to be regulated. I think that they want to take out any future competition because, again, they're making the bar so high to rebuild what they've already gone through, and they've already capitalized and made so much money on these things that if they can shut the door and have no competition, then no matter what happens, if they force them to split up, which actually I think would be better financially for all of them. I mean, again, just go back and look at the baby bells when they broke those up. You're just creating a lot more profit centers, okay? So at the end of the day, but I think they're pointing to have regulation. I think they'd love to have the industry regulated. But I think one of the biggest stories of the week is the Austrian 100-year bond, okay, for under a 2% yield. Think about that for a minute. This is the direction that we're headed. This is the damage and the destruction of what the central banking system worldwide, okay, how we ever let the central banks get in here in the first place out of England in 1906 is ridiculous to begin with, or 1913. Again, the whole thing is nothing but a mess. It's a way to creep and take away the buying power and the cash of everybody. Okay, it's look again. I was looking at happening. We're trying to go. They talk about Bitcoin. They talk about these other. They're trying to go to digital assets so that you can't see that there's no money. Okay, I don't know. Pretty scary. Pretty interesting. In the meantime, this is Bubba's Bottom Line. I am Todd Bubba Horwitz. We're going to step out here for a break, and we'll be back with more of Bubba's Bottom Line after the break. What's up, all? Hey, yesterday I did a great webinar on portfolios and building an algorithm directed portfolio that tells you to buy, sell. You're always in the market. We've got a couple of different portfolios to choose from depending on your value and how much you want to invest. In the meantime, if you want to see that webinar, just shoot me an email at bubba@bubbatrading.com. I'll be happy to send it to you. And again, great webinar, great product. Its profit factors are second to none. You'll never see profit factors like this, but you want to check it out. Certainly would love to have you check out the webinar. In the meantime, don't forget about our high school investing program. That's at Patreon, patreon.com/Bubba Trading, patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line. Welcome back. It is Bubba's Bottom Line. It is Sunday, July the 21st. And of course, this is Bubba's Bottom Line. I am Todd Bubba Horwitz, and as we take a look at the markets last week, and of course, equities they made last Monday, they made all-time, lifetime new highs. The rest of the week, they spent churning around. Had a pretty big meltdown on Friday late. And again, was it because of, late day selling, geopolitical tensions, fear over the weekend, profit taking, the end, who knows? What matters is that, as we've said, and we will tell you, I will stay long until the algorithms tell us to change. And so we're still long the market. And again, if it opens on tomorrow and it changes, hey, great. We'll change on Tuesday. I can't get worried and get involved. I think this is one of the big mistakes that many make is we're day to day, moment to moment. Who gives a rat's? It doesn't matter. Okay. The markets will pick a direction and then they will trend. And when they do trend, you want to be a part of that. You don't want to get chopped up in the middle. Okay, and I think that's something that everybody makes a mistake on. I think you see some potential weakness in the Russell. Okay, we're almost on a sell signal in the Russell, which could tell you something. Now again, we'll see. Right now, we remain long. Okay, the equities. Maybe I'd not like to be, but I am. Certainly, I'm still long oil, which I hate, but again, I've said that all week. I'm not going to change it. Again, I'm not going to tell the formula what to do. I'm going to follow it because, again, part of being a mechanical trader is the ability to follow what it tells you to do. Now, it'll reverse when it's time. I thought oil would maybe fail at 60. It did. But again, we'll see what will tomorrow bring? What will this whole mess in the Straits of Hormuz bring? Will oil right back? Again, I don't play the news. I could care less. So we'll see what it does. And when it changes, I'll get short. I mean, personally, I believe that oil is going back into the 40s, maybe lower. But for right now, I'm long, and long, wrong, and it is what it is. Gold, as we said last week, we expected a big move, and we got it. Okay, we got it, Toyota, right? I mean, there was a big, healthy move Wednesday, Thursday, Friday, and again, every move was, oh my God, gold's going back down, it's over. And I did Kitco on Thursday, and I said, look for a huge move and look for silver to break out, and here we are breaking out. Okay, now again, I think gold is now on target for its next big target is 1,500. Okay, I think silver, if it can get through 17, it might be on its way back to 20. Again, things are looking very solid. Again, these can change, but for today, okay, they still look really solid, and they're acting. And if you take a look at the gold chart, look at May, June, and July, you'll see the exact same pattern formed right before the market exploded, which was what gave me the clue or the footprint when I was able to say and write for Kitco all last week that I expected a big breakout because I could see the same exact pattern. I think that's one thing that we make mistakes at because all markets are the same, all patterns repeat themselves, and the charts always resolve out from short to long. So, shortest time frame to longest time frame. So if you understand that, then it shouldn't have been a very big deal to read it. I think you saw the bond markets were fairly whippy. It's kind of like they're on that roller coaster ride, waiting for what Jerome Powell is going to do. And we're cutting. No, we're not cutting. We're cutting. And again, they just kind of whipped around. I mean, they don't look as good as they did. But again, typically we had such a big move. Are they really just consolidating, waiting for the next move up? And that's what we'll find out in time is where will the foot. Now we're long bonds. Again, another product I'm not a big fan on, as you know, but again, I'm not going to fight it, right? That's the key to success is the willingness not to fight what works. Okay. So as we look at the grain markets, they had a rough week last week, but again, Thursday night when I put out my weekly ag report, we showed a pullback down to support across the board. And of course, Friday, they all exploded higher. Again, I believe there's a chance. I think we're going higher. That's number one. Okay. The algorithms back me up. Number two. Number three, it looks to me that there's the outside chance for a big market. Okay. Now we'll see again. A lot's got to do it. And I don't think any of it's got to do with the tariffs or with China. Again, China has done their job at reducing the yuan. So if they want to buy, they'll overcome those tariffs anyways. So, but again, I think now if you start to see some supply disruption, because we've got so much in storage and because, we're starting to see some changes, you could see a big market take off from here. So we're going to be watching. And again, we're going to be long as long as long as the algorithms say you're long, we're going to be long. And of course, I personally have liked them. And thought, when corn hit 341, I thought that was the buy of the century. I was on RFD TV on a Monday, and I said, just buy it. But again, they look pretty solid. My one concern might be in wheat a little bit, so we'll be watching it. It looks like hogs, as we thought they were going to go lower. It looks like they might have turned to the upside. They're at a key level. I think if August hogs go over to 85, then we're probably trying to go back up again. But I would watch very closely at those levels here. We were at over 100 and we're back. We got back into the 70s. So let's just see if this was a pullback and we're going to test the highs or if it's going to fail. So I think 85 is the key to watch there. And fat and feeder cattle or live and feeder cattle, I think they look great. Okay. Again, I can see all the fretting and the brow wiping of people out there because the price have not gone straight up. But if you take a look closely, you can see they both held key levels of support. They both rallied. They have now both held key levels of support once again. And it looks like they're ready to start taking off again to higher levels. And I think that's what we'll continue to see is higher levels in these products. Again, I think the ag space is the place to be right now anyways. I think when you take a look, if we do get some selling in equities, that money is going to be searching. You notice the chase for yield. We mentioned the 100-year bond for 2% in Austria. Are you kidding me? You're going to give up your money for 100 years for a 2% return? I mean, and then you've got, you've now got the falling yields in India, okay, where their 10-year is continuing to get hammered because it's got the highest yield. So again, money is chasing yield all over the place. And typically these are signs that are warning signs of not such good things to come in the future. Now again, we're not predicting, and I don't want you to think I'm telling you it's not good. Again, I'm long, and I'm not getting out. I mean, I'm never getting out of my core position. But for my trading position, I'm in and I'm long. Okay, no matter what happens. But there's so many warning signs out there. But again, warning signs are only a sign. Okay, the actual market footprint is what you got to pay attention to. So I think that's the big thing. But again, I think that you look at the dollar. Again, the Fed has tried its best to keep the pressure on the dollar. But because all these central bankers are manipulators, okay, because they're all screwing with currency, what are you seeing? Well, the dollar, again, once again, got a bounce because, again, you've got the yuan going down, you got the pressure from the ECB. Everybody's trying to reduce their currency value to make the dollar stronger. But again, it's a game. It's a joke and it's a game. And this is why, if they would just let the free markets float, we would have a much better system. Okay, this is where the Keynesian economy becomes a problem, in my opinion. Okay, I think, again, I'm not saying that Austrian is better. I'm not saying that Keynesian is better. I think there's a good blend of the two. Okay, because here you've got too much manipulation, which is what has brought to life the cryptocurrency world. Because again, those are free markets. And as you noticed, we said Bitcoin would probably go just a little bit below 10,000. It did. It's back above 10,000. Okay, I think that you're looking at the Libra coin from Facebook. I'm not a big fan. I mean, it might help Bitcoin. It might help get some of these ETFs off the ground. But I'm not a big fan because they want to be regulated. They want to have the ability. The key to the cryptocurrency world today is that nobody can manipulate it. It's truly traded by the free market. Buyers meet sellers, they exchange wealth. It's as simple as that. Okay. Versus having the central bank say, well, that we need to lower the power of the dollar, we need to print more dollars. We don't want that. Okay. We want free markets. Let the free markets decide and determine value. They're very efficient at determining, at creating asset classes without the interference of the clueless from the Fed and the central banks around the world. This is Bubba's Bottom Line. Todd Bubba Horowitz. We're going to step out of here for a break, and we'll be back with my commentary after the break. Hey, everybody. Listen, did a great webinar yesterday on our equity portfolios. They're just doing great. Had a drawdown this week, but again, doing great overall. Great profit factors, great things to look at. It's a free webinar. You want to check it out, just email me at bubba@bubbatrading.com. I'll be happy to send you the recording. No charge. Again, just want you to see it, see what we're doing. So you can refer to some of the things I'm talking about here as well during the day. In the meantime, don't forget about our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Let's get back to Bubba's Bottom Line and my commentary. Welcome back to Bubba's Bottom Line. And of course, every week I get to voice my opinion and I give either my bitch or whatever. And, usually it's one way or the other. And, as I opened the show, I said the four horsemen. Now we got the four racists. And, again, I know that everybody likes to call President Trump a racist. I don't quite understand it. But of course, nobody talks about Oman and Tlaib and Ocasio and Presley. There's no more racist than them. Okay. I mean, they hate Jews. They hate everybody. Okay. They hate America. So why are we so forgiving to them? Okay, I don't understand it. We've talked about this in this program since the original election, okay, back in 2016. If you don't like America, get the hell out, okay? If you don't want to try to make it better, and this is one of the problems, they're not trying to make it better, they're trying to create more havoc. Their ability to spend more time creating garbage, okay, is a joke. Okay, and again, Tlaib, Ocasio, Omar, and Presley, get the hell out if you don't like it here. Okay, you're United States Congress. Okay, you're supposed to be making the country better, not trying to ruin it for everybody, not trying to turn us into a complete socialist nation where we open the borders and let everybody in. Okay, again, I don't understand. All these laws and rules were on the books through President Obama, through everybody else. Because we have one president who stepped up and decided to enforce the laws. That's the problem that we have here. But the four racists, all they care about is creating trouble. Okay? Again, they've made it clear they hate the Jews. They compare things to concentration camps. They hate everybody. Okay? So if you don't like it, get the hell out. Nobody needs you here. Okay? You're certainly not helping with your ridiculous statements and policies. Okay? So to me, I mean, you know, it's obvious we're a free country. You're a citizen. Stay if you want to be a part of it. And if you don't like it, get the hell out. That's the way I see it. Look, you can call me whatever you want, but I'm telling you that that's the way that I see it. And I don't understand how we can continue to sit back and let these four racists control Congress and control a lot of the things that are going on that is pulling everybody to the extreme far left and to the extreme. Okay, to me, it only creates a lot more strife and will create a lot more problems on the road. That's my opinion. That's the way I see it. This is Bubba's Bottom Line. Todd Bubba Horowitz. If you watch the British Open, enjoy it. Shane Lowry, Water Brown. Have a great week, everybody. We'll see you back here tomorrow with Bubba's Daily Update. In the meantime, have a great weekend. As always, I thank you for listening. We'll see you later.